From fragile 5 to top 5, Indian economy is now enjoying a pedestal positioning. Growth is headed in the right direction, inflation is coming under check, NPA cycle is weak, and fresh capital formation has started. Reserve Bank of India Governor and his team have made the impossible look easy. Indian financial system is now resilient despite all the shocks. But are problems of yesterday behind us, or will they haunt us? What about global external shocks and preparedness of Indian financial system? To get all these answers, I have with me the man of the moment, Mr. Shaktikanta Das, Governor of Reserve Bank of India. Governor, it's an honor and the channel's pleasure to have you on ET now.
Thank you.
Governor, I guess the introduction was the question in itself. Ever since you took over as the Governor of Reserve Bank of India, December 2018, is this the best macro and the economy setup we've seen?
Yeah, I think in a long time, not just in the last 5 years. Of course, the last 5 years we have seen several turbulent moments. Initially coming from the collapse of the ILFS, followed by the COVID and so many other external developments. So we have gone through a very turbulent period. But I think in quite a while, if you see over a period of time, over a period of years, I think the confluence of factors that we have today, it's perhaps one of the best. Look at the GDP. You mentioned about GDP. You look at the fiscal consolidation, which of course is on the fiscal side. You look at current account deficit. You look at inflation, and you look at the fact that inflation has been brought under some kind of a control without sacrificing, or without paying the kind of heavy price which perhaps some of the economies have paid to bring back, to keep inflation under control. So therefore, if you look overall, in terms of growth, in terms of inflation, in terms of other macro parameters like the current account deficit or the economic activities, I think in all respects, and in terms of the overall stability of the financial sector, how can I miss that point? In terms of overall stability of the financial sector, the overall stability in the banking sector, the NBFC sector, I think it's perhaps one of the best confluence of factors. But having said that, this is a philosophy which we follow internally. There is no room for complacency at all, because a problem can suddenly arise from any corner of the world, and which may really complicate the challenges for us. So absolutely no room for complacency, and we need to remain focused and remain committed to our goal of maintaining financial stability and supporting economic activity in the country.
But looking at the current set of data points and the macro circumstances, can I say that you don't see a problem which is on the horizon? If there is an external shock, something unknown which we are not privy to right now, that could be an episodic issue. But looking at the data points and the permutation and the combination, you don't have a problem on the horizon per se.
More or less you are right, excepting that geopolitical crisis, new flashpoints can originate any time. There are weather-related challenges, weather events which can happen and which do happen without much advance notice. Excepting that, at a structural level, I don't see any major problem. But as I made a reference in the last MPC statement of mine, I think global debt, it's not so much a problem in India, because I think our debt to GDP is at a certain level, and it is expected to moderate, about which I have talked about in the last MPC statement. And when I say our debt to GDP, I mean the country's debt vis-a-vis external lenders and the debt of the state and the central governments put together. These are all within manageable limits. They are set to moderate in the coming years. But if you look at global public debt in some of the advanced economies, I think with their large fiscal deficits and with their large percentage of borrowing, with their large percentage of debt to GDP ratios, and if this continues, it can pose pose bigger challenges particularly to the emerging market economies. But that is not something which will affect India immediately. And also, I think among all emerging market economies, India is much, I am repeating the word much consciously, I think India is much better prepared to deal with such challenges.
Governor, the Reserve Bank of India was clearly ahead of the curve when they released their GDP projections for FY24. RBI number was 7. The consensus number was 6.3, 6.4.
That's right.
Post the last GDP trend, will RBI remain ahead of the curve and upgrade their FY25 GDP estimates also? Is there a case for it?
Well, I mean, the next monetary policy is just about a month away, and our research teams are working on the, on the inflation and on the GDP numbers. So I don't want to preempt what conclusions they will come up with. But as I look at, the outlook for growth, we said last year, if I recall, sometime in October, towards the end of October, I had said in one event that the GDP is expected to touch, and perhaps it will touch, it will be in the order of 7%. You are right, absolutely. The market was at 6.3, 6.5, and slowly the market adjusted to that. But today the number for the current year given out is 7.6%. And so now once the NSO gives a particular data, we work on that number. I mean, because that is the final authority which gives the GDP number. So far as, let me split it this way. First, let me talk of the current year, then the next year. So far as current year is concerned, the momentum of economic activity has been very good, has been robust, and we are now in the first week of March. Given the kind of momentum of economic activity, the growth momentum which we are witnessing, and the kind of high frequency indicators, the data points which we keep getting on a continuous basis, I would not hesitate to say that there is every possibility of the 7.6% growth for the current year being exceeded. Now, we have the numbers for the first 3 quarters. The implicit growth for the Q4, for the fourth quarter, that is current quarter, is 5.9%. Our sense and understanding of the high frequency indicators and the momentum of economic activity tells us that this 5.9% growth in the Q4 could be exceeded. And when that happens, obviously, the growth will be more than 7.6%. And I think there is quite a good chance of the growth, GDP number for the current year being very close to 8%. Now, coming to next year, we have given a growth projection of 7%. Other forecasters, including international agencies, have given much lower projections for next year. For next year, we stick to 7%. We are sticking to 7%. But I will wait for the next MPC, our research teams to do their analysis. But at the moment, as I speak to you, I would stick to 7%, which we have projected for next year.
But sir, if high frequency data points are so strong, then internal data purely is pointing towards a strong economic expansion. Can I at least infer that?
There is definitely a strong economic expansion. You see, you take 2021, which was the COVID year, when we had a negative growth. Thereafter, the revised number which NSO has given out is 9.7% for 21-22. Then the next year, which was earlier 7.2, has been revised slightly downwards to 7%. And this year, NSO is giving 7.6%. So 9.7, 7 and 7.6. If you take the average, it's 8%.
Yes.
And the 7.6 can be closer to 8%. So therefore, the momentum is continuing to be very strong. And so therefore, we are quite optimistic about next year. And we are quite, and I say it with reasonable amount of confidence based on our internal analysis and research, that 7% next year is definitely very much on the table.
Paytm, I would like to again establish for our viewers what a channel view has been, that Reserve Bank of India has acted in public interest to safeguard public interest when it comes to Paytm. The framework was compromised and Reserve Bank of India had no choice but to impose restrictions. Governor, that's 1 month old. After that, has Paytm taken corrective action? Have they earned the out of jail card? Could there be a review to that decision?
No, I don't want to comment on a specific entity. It will not be proper now for me to comment on a specific entity because we have, there is correspondence going on between RBI and the regulated entity. In this case, it is the Paytm which you have mentioned. So specifics of where it stands, I would not like to mention. But since you mentioned Paytm, can I sort of slightly expand the scope of my reply and bring in a few things which I think perhaps, there would be interest among your viewers. First point I want to say is that the Reserve Bank's action is against a regulated entity. In this case, the regulated entity is a payment bank. The Reserve Bank's action is not against any fintech company. I fail to understand, I do not see any reason why a narrative is, building up or was built up as if Reserve Bank has taken some measures against fintech companies. We have not taken any action against any fintech companies. Fintech companies are not regulated by the Reserve Bank unless they are NBFC lenders. If they are NBFC lenders, yes, they are regulated by us. In this case, the action is against a payment bank. Now, you may say that I am being defensive and all that. It's not being defensive at all. But I think I see this kind of narrative in certain sections of the media. But I think the financial sector players, they understand the situation very well. But for the understanding of the wider cross-section of your viewers, so therefore we have done nothing so far as fintechs are concerned. Fintechs are free to grow. We are supporting fintech companies. We have set up an innovation hub. We have formed a fintech department. We have a regulatory sandbox. We are going towards forming a a SRO, a self-regulatory organization for fintechs. So RBI is and remains fully supportive of fintechs. I'm saying this only to sort of give a message of, to sort of instill a sense of clarity in the minds of the people and on the fintech players. The RBI is all for fintech to grow. So far as RBI's regulated entities are concerned, fintechs provide a third-party service. So as a third-party service provider, so far as we are concerned, it is we fix the responsibility on the bank or the NBFC which is utilizing the services of fintech to follow the rules of the game. And so that is one point which I wanted to clarify. And financial sector, when you come to a regulated environment is a regulated environment. There are regulations, there are rules of the game, and you have to follow the rules of the game. If you want to drive a new fashionable car on the road, you have to follow the traffic rules. You cannot say that, I am the owner of a new car and I don't, traffic rules don't apply to us. Traffic rules are for everybody. And why are traffic rules put in place? Because there are children crossing the road, there are elderly people using the road, there are two-wheelers on the road, there are cars of various speeds on the road. So therefore, it is the responsibility of the traffic police to ensure that there are no accidents. So Reserve Bank is similarly placed as a regulator which is entrusted with the responsibility of regulating large part of the financial sector. Our endeavor is to ensure, to the best of our ability, our endeavor is to ensure that there are no major accidents. Accidents can still happen, but our endeavor is to ensure that there are no major accidents. Therefore, we have now deepened our supervision to the extent that we are able to sort of anticipate problems and risk build-up. All our actions are determined with the objective of maintaining financial stability, protecting customers' interest, protecting depositors' interest, and wherever we see a risk building up, we have to necessarily take action in the overall public interest. So this is the overall background for all the regulatory actions which the Reserve Bank has taken, not only in the case of the Paytm, but in the case of a few other regulated entities. Whenever we take action, it is mainly, you have to see from where we are coming.